Okay, the CPA here. What we want to talk about now is a couple of things. There's a new law as it relates to net operating losses. Now, the first thing you want to think of is that this isn't necessarily for a large business. There are times that you could get yourself into a net operating loss. It's not necessarily a bad thing for tax purposes because it's going to be an offset. Here's what's new though, a couple of things. One, the NOL, the net operating loss, is no longer something that you can carry back. Used to be that you could elect to carry it back 2 years and offset prior year taxes and get refunds. Under the new tax law for 2018 forward, it will only carry forward. So the NOL will only carry forward. If you generate a loss for 2018 and you are carrying that over, and that operating loss, the new thing, and it's not great news, is that you're only able to offset up to 80% of your taxable income. In the past, if you had an NOL, you'd be able to carry that over and it could offset up to 100% of future taxable income. So even if you've got a big old NOL, you might be in a situation where you're still going to pay tax in the future. But here's the thing to note. If you have an NOL, a net operating loss that was generated in 2017 or prior, that is something that as it carries forward, you're still able to offset 100% of taxable income. So it grandfathers in, so to speak. But here's the thing. If you take it in its simplest form, basically on your individual tax return, all of your pass-through and small business losses, if you aggregate those together and the loss is greater than $500,000 married filing jointly, $250,000 single, then you're in a circumstance where that's considered now an excess loss. That's new in this tax law. Why does that matter? An excess loss then cannot be taken. So basically what they're saying is, in the past you might be able to offset $1 million if you had that in loss. And how would you even have something like that? Well, it could be from special depreciation. So under the new tax law in 2018 forward, for the next 5 years, they've introduced this new concept, this new terminology, excess loss. And here's what it means. If you have aggregated together everything and you have over $500,000 in losses, or $250,000 single, you're not able to take the loss above the $500,000 even if you have basis to take it. What happens to that is that it's carried over to the future year. You may think, that's not a big deal per se because I'm going to carry it over. But it gets recharacterized as a NOL, net operating loss. And then what happens there? It falls under this new tax law where a net operating loss is only able to offset up to 80% of your taxable income. So there's going to be some new strategies involved. If you're having a situation where you've got some large losses, it might be looking at, well, would it make sense to take maximum depreciation? Because you may have to have a situation where you have losses too great and then you're going to have to carry them over, where depreciation is a 100% write-off against income. But if you've taken too much depreciation, and you now have an overall $500,000 loss, or more, I should say, over a $500,000 loss, well, that's going to carry over, and now it's not going to be 100% potential offset against your income because it will only be up to 80% of your taxable income. So if your head's spinning, here's what you need to know. You need to get us involved. You need to get a CPA involved, right? If you're dealing with, if you're a small business owner, you need to be doing these things with a CPA. Bottom line is, thanks for tuning in. Need to subscribe. Got a video coming out every single day, giving out good free information that is going to definitely benefit you. So I just need you to hit subscribe. It's the only cost of admission. Coming to you from Boulder. And then don't you ever forget, you've never met a CPA quite like me. Don't you ever forget, you've never met a CPA quite like me.